Namaskaram. So, this is the clause number 15 of Form 3CD. I guess it is not very often that you will be reporting under clause 15. Clause 15 is applicable only when anti-tax evasion provision under capital gain chapter is triggered. And when I say anti-evasion chapter means some people who are having capital asset, they convert that capital asset into stock in trade. Now, why somebody will convert capital asset into stock in trade, my dear friends? Very simple logic. In capital asset, you are having limited exemptions, isn't it? You can take only cost of acquisition and cost of improvement and transfer expenses. Only these three expenses can be claimed as a deduction. Apart from that, the capital asset have a specific rate of tax, right? If it is a long-term capital gain, if it is a long-term capital gain, then 112 is applicable, and in that case 20% flat rate is applicable. So there is no slab benefit given in the capital gain chapter. So many people, they don't want to pay higher amount of tax under capital asset or under capital gain chapter. So what they choose to do, they convert it into stock in trade. And if you sell it as a stock in trade, then you know that the PGBP will be computed. And when PGBP is computed, you can claim as many as deduction you want. Advertisement expenses, salary expenses, rent expenses, electricity expenses, traveling expenses, and a possibility of claiming a higher deduction is there in the PGBP chapter. So if somebody is having 100 acres of land, rather than selling it as a capital asset, that person will choose to go into a real estate development business or land banking business and do it the plotting of the particular land and convert it into stock in trade and sell it as a PGBP asset. Somebody who is holding a lot of jewelry or gold in hand as a capital asset will start a jewelry business, convert that particular jewelry into a stock in trade and sell it as a stock in trade. Somebody who is investor in the stock market and he is having a very good amount of, say for example, 100 crore worth rupees shares. So he has accumulated those shares and now he wanted to sell it. Rather than selling it as a capital asset, they may choose to sell it as a PGBP or stock in trade. And that's the reason in capital gain chapter itself, there is a section 45. Okay. Section 45, this particular section says one of the moment capital asset is converted into stock in trade. Okay, section 45 is the charging section. The moment capital asset is converted into stock in trade, in that year itself, the tax should be computed. Remember my words, tax should be computed, but tax will be paid in the year when stock is actually sold. When SIT is actually sold, please understand, because when you are converting into a stock in trade, that is a notional gain. Your bank account is not yet credited, and that's the reason this is one of the exceptional provision we have in the capital gain chapter. Definitely I can't teach you 45 here because that is another time consuming activity it would be. So just I am giving you heading that if capital asset has been converted, into a stock in trade, then you have to report under clause number 15 because that is a taxable activity as per section 45 of capital gain chapter. Now, how will you come to know whether capital asset is converted into stock in trade? So for that, you need to check the fixed asset schedule of the last year, and you need to check what type of addition or deletion has happened in the during the year. And you need to also check whether any capital asset has been moved from fixed asset schedule to the current asset schedule. Yeah. So that's the reason you are supposed to do the detailed audit of inventory as well as your fixed asset. So only that moment you will understand, whether anything is removed from the fixed asset schedule and included in the inventory schedule. Okay. So that's a way of finding it out. So what type of declaration you are supposed to give? Description of the capital asset, whether it was a land, whether it was a building, whether it was a jewelry, whether it was the investments. Okay. So date of acquisition when this capital asset was acquired, cost of acquisition, and amount at which the asset is converted into stock in trade, that is a fair market value. Okay. Other than that, date of conversion we have to report, because by taking the fair market value as on date of conversion, we are supposed to compute the capital gain. Again, remember one thing, you are supposed to compute the capital gain in the year of conversion, but you are not supposed to pay tax in the year of conversion. You are supposed to pay tax in the year when stock in trade is actually sold. Okay. Audit checklist. Now as an auditor, what are you supposed to do? Okay. Ask assessee whether he has converted any capital asset into stock in trade of the business during the previous year. So first thing is discussion. You should always talk to the client openly. Detail of capital asset converted into stock in trade during the year are to be given. Check whether the assessee has converted any capital asset into stock in trade during the year of audit. Now here you are asking and here you are checking. Checking means sometimes assessee may not tell you the fact. You have to use your own brain and determine the way I told you. You need to observe the fixed asset schedule and you need to observe the inventory schedule, and accordingly you will say it. Obviously, whenever the capital asset is converted into stock in trade, the amount won't be a negligible amount. It has to be a substantial amount, and that substantial change can be easily find out by the auditor who has done the audit genuinely. If yes, obtain the details of the nature of the capital asset, date and cost of acquisition, and amount at which the asset has been converted into stock in trade. So that's a reporting under clause number 15. Thank you.